Hi, I'm Ian Varley, CEO of Eagle Business Credit, talking to you today about working capital loans for your business. Every business, small, medium, or large, needs working capital. It's the finance fuel that helps you maintain and grow your business, covering your payroll and all your expenses, whether it's a line of credit or any kind of finance. You need it as the lifeblood to finance your business. So there are many forms that this can take. Traditional bank loans is one way to go. Obviously, if you're a new start company or if you have some personal credit challenges or your balance sheet is just not there yet, a bank line of credit may be difficult to obtain. They will look at your track record and want to see some longevity and deep pockets in order to give you a good facility. So many small businesses will look to alternative forms of finance as a solution. There are many online lenders these days, whether it's a merchant cash advance company or an online lender that you can go online and qualify for very quickly, then they're very useful tools. But be aware the cost can get expensive. If you're applying for a loan online, make sure you understand what that interest rate is, what the daily, weekly, or monthly repayment is going to be, and most importantly, can you afford to repay it? Bear in mind, they may have an early termination penalty as well. So there could be some unforeseen costs to that side of the business if you take out one of these loans. And we've seen many companies that can get into difficulty with them as well. They take out one loan, struggle to make the repayment, so take out another loan, and it becomes a snowball effect. So again, although they're very useful, watch out for these online solutions. They may not be as good as they seem, and although they're easy to qualify for versus a bank, for example, they can actually do some harm to your business in terms of your cash flow. Consider factoring. It's not a loan. At the end of the day, we're providing you a financing tool against your sales. You can then bridge the credit gap between when you complete that sale and when your customer pays you. And that's really going to be a drag on your cash flow, especially if you're a growing company and adding to your sales each month. Factoring is a great working capital tool. It's not expensive. It's also not a loan, like I said. You don't make any repayments. We obtain payment from your customer at the time that the invoices fall due and advance you the funds on the new invoices each time you make a sale. So for many companies, they find it a flexible alternative that really becomes an extension to their business and a funding partner that understands what they do and supports them through their growth. We see many clients here at Eagle that come on board at a certain size, and we help accelerate and fuel their growth because they're comfortable in the knowledge that the funding is there to really help them grow. And it's not debt, as I mentioned. So as a small business, you have many options available to you. If you'd like to discuss any, please feel free to give us a call. We're more than happy to help.